Farm for Profit Podcast. Take a listen, have a blast. Farm for Profit Podcast. Learn about farming while having a laugh. Farm for Profit Podcast.
All right, Corey, have you had your tax planning meeting yet for the end of the year?
I have not.
Are you ready?
I am not.
You're not, neither am I. But it's important to talk about it before we get to that point where it's too late.
Two of my least favorite things. Bankers and
Taxes?
CPAs, the taxes that I have to go.
That's right.
I guess I like CPAs better than bankers, but
I was just listening to a podcast about Independence Day when we wrote the Declaration of Independence and how it was no taxation without representation. This is kind of similar, right? Like if you don't go prepare and plan, it's on you.
right.
So if you're worried about how much tax you're going to pay, because we had a good year, especially all of our Farm for Profit listeners, because they all farm for profit.
Right. Just trying to think of a metaphor for throwing some tea in the bay. What would that be on the ag side of things?
That's funny, and I don't know if we want to go there, especially with the way your mind works.
Yeah.
But we've got a tax professional here. We've got a CPA, Bill Glazner. He's with Adams and Brown. They're an ag. He's the ag industry leader for the firm. They handle a lot of Midwest clients, spanning quite a bit of an area. Welcome to the podcast, Bill.
Yeah, thank you guys. Appreciate it.
Bill's coming straight off of a strategic planning session, so he's got all kinds of latest and greatest tax news to share with our listeners. He should be all up to speed.
Where are you based out of, Bill?
I'm actually located in McPherson, Kansas.
Okay.
We've got offices spread from, we've got an office in Iowa, Arkansas, Kansas, and we cover clients throughout the Midwest mostly.
Wow. Are they mostly ag clients, or do you guys sprinkle in some commercial as well?
Yeah, we do have other industries that we also service. We service manufacturing, healthcare, and so forth. But our ag industry is our largest industry group. So
Nice. Well, has there been anything exciting since last year? We tried to put one of these episodes together each December. It's not always the most exciting show, so we're going to do our best to pep it up. But we know it's necessary.
Well, Tanner, it depends what you consider exciting. So
That's fair.
You know, accountants get excited about different things than farmers sometimes. So, but yeah, there are a few different things that have changed. You know, some things adjusted for inflation, but you know, we've got expanded credits for energy efficiency type improvements. You know, along with outside of just taxation, some USD reimbursements for some of those types of things that probably wasn't in existence in the past.
Oh, there you go. Corey, are you going to take advantage of any of those inflation adjustments?
I don't know. That's why we're talking to the CPA. I know he mentioned energy and just the money that's available on the farm for energy things. We've talked about that on grain dryers and things of that nature, and we're still trying to take advantage of that. It's my dad said to me this morning on the way in, he said, you know, it's not as easy as you guys make it sound on the podcast. I think it is, but there's just when you deal with the government, it just takes a little longer, a lot more hoops to jump through.
Yeah.
That's exactly right, guys. You know, I know on these reimbursements, we're just going down the road on that process with a lot of farmers, and you know, the application process. It's not as simple as going through your local FSA office to get those, but if you've got the right contact, it becomes a lot easier. So
as we sit here and want to reiterate the importance of this episode, why do you feel it's important to meet with your CPA before the end of the year?
Well, it's kind of like meeting with your crop consultant before, you know, while you're growing your crop. You know, the idea is to tweak and get the best result that you possibly can out of what you're trying to accomplish for the year. The same thing goes with your CPA and your financial side of the farm.
How often do your top tier clients meet with you? Is it just once in December and then once when it's time to sign the line, or how's that go?
I'd say my top tier clients meet with us probably on a monthly basis. We have conversations about what they've got going on. We don't do planning just at the end of the year with them. They call us when it's time to trade equipment, or what are the best options, what makes the most sense. Based on our structure, who should own the equipment, who should buy the equipment. Where am I going to get the best bang for my buck? We talk about financing. We talk about a lot of different things that we can provide answers for that maybe they struggle with maybe a little bit more than what we do.
This is not a tax question, but it would be, I guess, a CPA question. And since you spurred this question, since you asked about top tier clients, do you have any farms that you work with that actually has, I want to call a CFO, Chief Financial Officer, or something that is like their sole job? Maybe not full time. Maybe they're a CFO for several farms or several businesses. Do you have any clients like that?
We do. We do have a few of those, and they focus. They're very good at focusing on the financials and drilling down into those. But we still get pulled in on those meetings because we're in tune with the latest tax developments, with and a lot of times with more of the latest USDA, FSA type developments that are taking place.
Well, I asked that.
And how that integrates with the financial side of things that they're actually already looking at.
Right. I asked that because I've kind of been considering it on our own farm. As farmers, we wear a ton of hats. I mean, on any given day. And, some like to sit in the office, but you don't get anything else done unless you have someone hired to go do that. So, it's just like a juggling act. And it just seems like so much stress when we go to make a decision on purchasing a piece of ground, renting a new piece of ground, purchasing a piece of equipment, and then we have to go sit in the office for 8 hours to update everything and see where we're at and do projections. And it's like, man, if I could just snap my fingers and say, Tanner, you're my CFO. Hey, where are we at? What are we looking at for projections? What do we got for a budget for new equipment, or, how much can we spend on rent? I think that would. And then, hey, by the way, at the end of the year, go see the CPA.
So, Corey, that's probably our fastest growing area right now is fractional CFO services.
Okay.
And that's what a lot of our top tier clients are doing. For a lot of them, keeping their books for them, or a majority of their books for them. Then meeting with them perpetually, usually monthly, at the very least quarterly, going through that. We're doing farm management reports, crop year summaries, break-even analysis, marketing reports, cash flow reports, so that they know what their cash flow projection is versus what they plan for. Putting all that together, basically digging into analytics for farmers.
Man.
Much like private business does, and that's how they've been successful and expanded, over the last several years like crazy. Trying to apply those same principles to farmers.
Take my money.
Just take it.
I don't know what it costs.
Here's
a check.
My money. See, I try to put my CPA into my golf foursomes, so that way I get free meetings.
Oh.
We just do it on the golf course during a golf tournament.
Is that how that works?
It's exactly how it works, and yet I still feel like I'm just as far behind as you are.
This is why, honey, I need this country club membership, because it's basically going to wash my CPA meetings.
Yeah. So on those types of things, that is an area that you can get to before you're ready to bring somebody on full time yourself, because you talk about expenses there. That's a significant expense to bring a full time CFO on. If a fractional CFO service gives you a lot of those services, a lot of those insights that you otherwise just don't have available to you. So,
well, us as farmers seem to not value our time very well, or nothing at all. And, we want to do everything ourselves, which I get. That's inherently who we are. But I think the opportunity that we could open up with something like that and have more time to be out in the field, or maybe be with family or whatever. I think we'd be rich more than just in monetary value.
Yeah.
So
Yeah, I think, if you talk to some of our clients that have gone down that road, I think most of them will tell you that they've gained more financial benefit by far than what the cost is.
yeah. So as you take on a new client, and this is a situation for myself as well. So my CPA is at retirement age, staring retirement down in the next year or two, and that scares the crap out of me as a farmer, because I need to find someone new. And a knee-jerk reaction would be go to the next guy that has a lot of experience down the road, but I want to get someone more my age, so I don't have to do it again. What does a new meeting with a new client look like on the ag side?
So with us, it's a team approach. Okay, our ag team within our firm is we've got about 40 people, 40 accountants, CPAs that basically focus only on ag for the most part. They keep up on the different rules, regs, and so forth. And all our clients are serviced by a team. Okay, so if one person's gone, another person can help. It's built-in succession planning. You don't have that problem that you just described, Corey, where somebody retires because you've got a second team member that's just going to step in and fill that role, and all you're going to do is add a team member to, when somebody leaves. So you're constantly or perpetually taken care of through that process, and the succession planning of your CPA is already built in.
That's nice.
That is kind of handy. I didn't think about that. But if you work with the team, you always want to have your person, your guy, the one that you're going to be on the golf course with.
Yeah.
Since we got a lot of listeners that are golfers, right? Yeah. But the team approach really provides you more backup and maybe even a couple of different opinions. But as your teams of CPAs have been reviewing the tax code for this year, has there been many changes? Do we still have Section 179? Where are we limited there?
Yeah, so Section 179 is still there. There are some changes, but not substantial changes. So Section 179 is still there. It's $1,080,000 this year. It just basically gets indexed up. It starts to phase out after you have 2.7 million of new equipment placed in service during the year. So once you get up above 3.7, it's basically gone of new equipment.
Wow, Corey, you got to watch out. You're at the top end of that.
I mean,
limit.
you got to watch out. That's only 4 combines.
Yeah. The inflation costs of equipment have gone up a lot faster than what the adjustments to the code has been. So yeah, you're exactly right. A couple of cotton strippers or a few combines. It doesn't take much to hit the numbers we're talking about.
Are we at any risk of that going away? Has there been any more discussions about that?
Well, nothing serious at this point. I think 179 is probably going to stick around. What is going away is bonus depreciation. So, we were at 100% bonus last year. In 2023, we're at 80%. Okay, so if you don't qualify for 179, or if you don't want to use 179, you've had bonus depreciation available to you. You basically could write off all your equipment in the year you place it in service. Now going forward, that's phasing down 20% every year. So it's at 80% for 23, drops to 60% next year, then 40, 20, and then it's gone.
So now, or when would that be applicable to a listener to utilize bonus? Is that when they max out 179?
Well, it could, yeah. Generally, I would say that's when it would be used. Okay, Now, it can also be used, let's say that as a farmer, you've got non-farm income you're trying to offset, okay? Investment income, capital gains, it could even be capital gains, from the farm somehow. You can take bonus into a loss situation on your farm, whereas 179 has a limitation based on your earned income or your ordinary income from the farm. So you can't create a loss on your farm to offset non-farm income, so to speak.
Using 179.
Using 179. With bonus, you can.
So are there any chances of this stopping and it coming back or ratcheting back up to 100, or it's pretty much written out?
Well, yeah, but it would require action in Washington, and it seems like action in Washington is on slim supply right now. So, at least that's my observation, and I really think with an election coming up this next year, it's unlikely that anything will change on that unless somebody gets drastic and decides to need a tax cut out there to get reelected. But outside of that, I think after the election, we got to reevaluate that question and see if that makes sense or not.
That's good. What about some of these other areas? You were just kind of talking about being able to take a farm into a loss position. Is there anything changing with taxation levels, taxation amounts, maximum earnings, anything along those lines?
No, I mean, pretty much everything that was in play in 2022 still exists in 23 in that realm. Things were indexed for inflation, but beyond that, the rules are basically the same. We're still looking at QBIT is still out there, although you're asking questions about 23, which I always encourage people to look forward into the next few years, not just this year, because planning 1 year at a time probably isn't always the best approach when we know what the tax laws are doing going forward. Kind of like the expiration of that bonus depreciation. If that's something you've been relying on, figuring out how you're going to spread that recapture of that is probably relevant every year, including the current year. So, then the other things that are expiring, I think you probably talk about later in here, but estate tax exemptions are going up. Rates will go up. The current rules actually sunset in 2025. So beginning January of 26, that we've got a whole new set of rules if nothing is done in Washington, because the current rules basically expire and we go back to the pre-rules.
That's interesting. I didn't realize that we were on a finite limit of time before rules kick off or kick out.
Right.
Yep. The last tax law changes were passed for a 10-year period because they have to justify the budget for those tax cuts. So they only made them relevant for 10 years.
Got it.
So under those rules after 2025, are the rules we're enjoying today or dealing with today basically go back to the rules that we had in place prior to that tax bill.
So when you say they've been indexed for inflation or adjusted for inflation, how is that figure accounted for? We're coming off record high inflation. Did the tax code keep up?
In most respects, yes, it kept up with inflation based on national averages. It didn't necessarily keep up with inflation on the farm. Okay. We all know that input costs have gone up dramatically in the last couple of years. Thank goodness we're seeing some of those prices get corrected, like fertilizer prices and so forth. But we had some real spikes in there. I mean, inflation didn't keep up with those types of things. I think price increases we're seeing on new equipment. it's probably higher than what inflation actually has been as a nation.
Well, that's handy.
Yeah, it's interesting. I had a question and it lost me.
You're gone?
Well, I'm just listening, and I'm just trying to soak it all in.
So I know that we in Iowa in 2020 experienced the derecho, and we got a couple of assistance via disaster aid packages that came out of that. Had a little bit more, I think, followed in 21, but a lot of our listeners in the southern U.S. are experiencing extreme drought or had really dry conditions this year, and some others, then all of a sudden we had flash flooding. Are we looking at any type of disaster aid? How has that hit our tax returns?
Yeah. So there is a third payment coming out for, on these disaster payments, a recovery payment, and it's based on crop insurance. If you haven't already received it, you're probably going to get an automatic calculation on that. If you don't get any money on the automatic calculation, there is an application process you can go through. Now, in order to collect the payment, you have to agree to buy crop insurance the next couple of years.
Oh, it's next couple of years.
Yep.
Do you know that? That you had to agree to buy crop insurance if you're going to accept the disaster payments.
No, I guess I didn't know that. It's probably embedded in there.
This next disaster payment that's coming out, yeah.
Huh. I'm glad you shared that, because I wonder if our listeners are going to be having the same reaction that we're having.
I'm sure, you sign all these papers with a bunch of words on them that no one really reads all of them, the fine print. So it's probably in there. Is there any little nuggets that aren't commonly known for tax code for farmers? I mean, I'm asking because I heard one last year, I think it was, talking about you can write off the fertility that's already in your soil.
Yeah. And this became a really big deal when fertilizer prices kind of skyrocketed. Now that prices have come down, we're seeing maybe not quite as much activity in that area. But yes, if you buy a piece of ground that has that you weren't farming before, okay, if you were a tenant farmer buying it from the landlord, this doesn't work because you already took a deduction for the fertilizer you put on there. Okay, but if you're buying another piece of ground and it's got above average fertility on it, it could be because of a manure application program. It could be just because fertilizer was applied recently, anything like that. You get some soil testing to prove the fertility levels and the fact that it was above average, and then have that valued. Then that can be amortized, usually amortized over a 12 to 24 month period.
BOSOFA does that.
BOSOFA?
I think that's how you say it.
Oh.
Is that the only company?
It's one company I know that does the pre-soil test and the...
Welcome, Dave, to the podcast.
Welcome.
Most of your crop consultants, if you're working with one, can help to arrange for those testings too.
Okay, so you said that's on a new piece of ground that you purchased. Does that have to be within the year that you purchased it, or could it be the next year, or how does that work?
Yeah. So the key is you need to get that soil sample close to your purchase date to be able to prove this. I mean, if you got it a year down the road and you've already run through a whole cycle of fertilizer, it's impossible to prove this. So the key is you got to get that soil sample close to purchase date, and then you get a value placed on that fertility content to the extent it's above an average content for the area, and then you can amortize that.
Who determines what's average?
Well, there are groups out there that do that. I'm not the guy that does that because that's beyond my wheelhouse. But we've got several people that we call in for that type of thing. And like I said, I'm seeing a lot of most crop consultants are getting involved in this. I'm seeing a lot of co-ops that are actually taking this on now too. So, I recommend you check with those guys first, and you're probably going to find somebody pretty easy that's doing this.
Interesting. We'll talk about buying farms and selling farms. What about 1031 exchanges? I'm sure, Dave, you're already up on speed of this, but any changes there? Can we still defer that tax?
Yeah, you can on real estate. So we used to be able to do 1031 on equipment too, but we lost that a couple years ago, and it's still gone. So, but yes, real estate still qualifies for 1031.
And no limits. Corey could sell or buy millions of dollars of land, and
Yeah, now if you've got $100 million worth of land you want to reinvest in another piece of ground, you're welcome to do that. Just got to follow the 1031 rules very closely. Never take constructive receipt.
Sure.
Make sure the notifications and the timelines are all met.
And I don't think we've ever talked about the why the 1031 is in place. I think it's, in my opinion, it's just to incentivize more business. Is that?
Yeah, and it's not 1031 is not just available to farmers; it's available to any taxpayer. So anyone that has either business or investment real estate is able to, basically sell that and take a different position in a different piece of real estate. Following the guidelines that are laid out. For farmers, it makes some sense. I mean, maybe you've been growing your farm, along the way, and you're kind of spread out a little bit more than what you want to, and one of your neighbors is selling off his ground, and you really can't afford just to add all this ground, but you could sell some of your outlying ground and replace it with his ground.
Okay.
It's those types of situations that I think those exceptions were originally put in place, and reason why it's still out there.
Yeah.
Now Washington has come out a couple of times and threatened to lower or limit the amount of 179 you can do in a year. But I've never seen enough traction to consider that a reality of taking place in the near future.
It certainly sparks the big players, that they use this like they know it like at the back of their hand. They're buying and selling and we have a lot of farmers around our area that are kind of getting pressure from town, basically urban sprawl, and if they hold out long enough, they can go buy 4 acres to every 1 acre they sold, type of stuff. And that's what they're using the 1031 type stuff for. So Dave's got 1031 buyers all the time.
And we're seeing an invasion of the farm community too, honestly.
Yep.
Doctor, I'll pick on California because we're, a ways away from there. But doctor in California sells his medical practice, and he's got a clinic worth, $5 million, and he does a 1031 on that and buys farm ground in Kansas to hunt on.
Yep.
So, or in Iowa or wherever.
Yep.
So,
yeah, that makes a lot of sense. One thing that we learned last year on the podcast, and I hope it's still in place, our family's utilizing young labor, and we're able to take advantage of that. I got a couple of
Did
younger
you just
nephews.
admit you use child labor?
Yes, absolutely. But there's limits to that, correct? It's not. It's maxed out at a certain point, right? That's tax deductible, and they don't have to claim it as income.
the farm labor.
Correct. Yep.
Okay, so yeah, if you're talking about hiring your kids, you can actually pay your children, your dependent children, not necessarily nieces and nephews, but you can pay your dependent children, and that's exempt from payroll tax. Okay, and there's no limit on the exemption on payroll tax. Now they have a standard deduction, so your kids can each earn probably somewhere a little over $10,000 and pay no income tax also. Okay, so if you've got kids helping you on the farm, you can actually pay them cash wages as a dependent child, and this is assuming you're on a Schedule F. Okay,
right.
If you're running your farm through an entity, that rule is different, and there's still ways around that, but you've got to follow the rules. So.
Is there a reason? So I tried to do this last year with my tax accountant and my kids, and she shut it down hard. She says, no, you cannot do that. Your kids aren't old enough. I said, what do you mean they're not old enough? So I have them clean the office. They come in, they clean my office.
I've seen them do it.
And I tried to make the argument to her, and she's like, no, we are not putting your kids on there as a write-off. And I don't know if she thought I was trying to be shady or what, but I'm like, legitimately, that's what we were doing, was having the kids clean the office on Sundays, and they were coming in to do that. And she said it all had to do with an age. She says there's child labor laws in Iowa that we can't start doing that until they're at least 16. It's like, what?
Okay.
But I didn't know
But
if
does she know the Schedule F side of things?
I don't know. Now I'm doing it for my business that's not a Schedule F, even though we have a Schedule F. She was
Is
reporting
it all ran under one?
She was reporting it under our
Schedule C.
Schedule C
Yeah.
for the company.
Yeah. Okay. So I can't say that I'm an expert on child labor laws in Iowa. Okay. But generally, most states, your own children are exempt from the state labor laws.
Yeah.
And the federal labor laws. Okay. I mean, your own kids, you can't enslave them, but they can work for you, and it falls outside of those rules generally. Now, the IRS looks at this and says it has to be a reason. You have to be able to justify the wage you're paying.
Yeah.
Okay. So if your kids come in and they sweep the floor once a month and it takes them 30 minutes a month, and you're paying them $20,000, that's probably an unreasonable wage.
Yep.
Okay. But if you're paying a reasonable wage and so forth, generally, I don't see a reason why you wouldn't be able to take that.
Fair enough.
I think listeners are going to start hear ad reads by little kids' voices.
Yep, it was $10,000
We'll
worth of
pay
ad
them
reads.
for absolutely.
Yeah.
Well, and I try to justify, like, I had my kids doing SEO, search engine optimization stuff on the back end of our website, and they're using ChatGPT AI bot. My kid's just really good on a computer, but he's also 13. And she said, your kids aren't doing that. Yeah, they are. I guarantee they are. I'm having them go in there and actually add the SEO stuff. And she said, there's nothing they can do you can justify. So I don't know. I might have just set her off that day or something.
Well, I would have to disagree with that. I mean, I grew up in a farming family. Okay. So I know as soon as you start walking, you start working.
Heck yeah.
Yep.
So, it's, and you can justify that.
Yeah.
Especially with your own kids. I tell you what, I got, I've seen a lot of 12-year-olds outwork hired hands that are adults. So.
Yep.
Absolutely. Well, you teased a little bit about the estate tax exemption and what's going to be changing there. Is it the same thing with gifting levels? How do those two work together?
So gifting levels, I think current year is $17,000 a year. There's a gift tax exemption amount. You can give that up to that per person, per individual. There have been threats of changing that it's per couple. But right now, if grandma and grandpa are as an example, both still alive and they can each give an individual and that individual's spouse $17,000 in any calendar or in the 2023 calendar year, and it's exempt.
And that is different from the 11.7 million that is the tax exemption for inheritance.
So the 11.7 million is actually up to 12.92, I think now.
Okay.
Because of inflation. Okay. That actually that amount goes up through 2025, and then it falls in that sunset provision. Okay. And after the sunset, it's estimated that it will drop to about 7 million per person.
Wow. That's a big drop.
Okay.
Yeah, and it'll kill a lot of farmers because it doesn't take much to get to 5 million anymore.
No.
And I thought under the Trump era it backed up to 1 million until they re-vote on it.
Yeah. No, it went back to the pre-law era, which at that point it was around 3.5 million, but with inflation it's going to be up. They're estimating it to be up around 7.
Do you think that the next administration come November will change that and up it because they see a need for it?
Yeah, your guess is as good as mine. I would certainly hope so.
Okay.
Okay. But yeah, I'd rather play blackjack than guess what Washington's going to do.
Oh,
Fair
that's
enough.
a pretty good comparison. I like that.
Okay.
I like that.
So we talked about having little tidbits of what your top tier farmers do, and we talked about having a CFO before you got in here, Dave.
Mm-hmm.
Is there anything else that stands out with your top tier clients that they're doing as far as record keeping or maybe on their farm that is commonplace?
So, I've been working in this field for over 35 years and working with farmers almost that entire time, or I have been for that entire time. So I've learned a lot of things. I've seen a lot of people that are very successful, a lot of people that really struggle. And on the outs, if you just drive by their farms and start, looking at what they're doing, I mean, they're running about the same size of farms. The things that I see the most successful people doing are really focusing on the financial management of their farms. I mean, they are looking at, they know truly what the break-even analysis is. They're very active in marketing their commodities. They are probably not as focused at eliminating their income tax, but rather managing their income tax and managing their cash flow. Most of these guys are very active. You mentioned you hated going to the CPA and to the bank.
Yeah.
Okay.
Yeah, he loves going to the dentist. He's weird.
I do love the bank. I do love the dentist.
So for me, it's maybe the dentist instead. but actively working with your banker is not a negative thing. Okay. Not all bank customers are created equal, and they're not all treated equal. Okay. Contrary to common belief. Okay. Different people get different interest rates. Okay. The better relationship you have with your banker, the more actively you manage that relationship, the more likely you're going to have a lower interest rate to deal with. So, those are things I see the most successful people out there doing. And most of my guys in the top tier are guys and gals are doing all of those things.
Okay. I like that. Go ahead.
Do you guys think that I had this thought the other day, with inflation going up and whatnot, do we as a business or farmers need to be more conservative and, for lack of a better term, batten down the hatches, get your stuff in order? Everybody always says, make sure your papers are in order in case we get into a harder time. And I've thought, man, I don't do a very good job of that. Maybe we need to set a better budget, because we've been buying as we need and getting equipment as we need, and I haven't put as much thought into hey, we don't need that right now. Let's be more conservative, or let's, like I said, do more budget. Do you think farmers do that more when they think that inflation's coming hard?
Well, I think I think they do. I think they do it maybe more based on when it rains and when it doesn't than inflation sometimes. But from that standpoint, I think one thing that really is new this year that's impacting people is rising interest rates.
Yep.
Okay. Most farmers out there that I work with, I mean, they're paying double the rate they paid a year ago on their lines of credit. Okay. So part of the tax planning that we're doing right now with farmers, that I'm actively doing with farmers, I'm encouraging them to take into consideration what they're carrying on their line of credit and what rate they're paying. And, does it make sense to borrow additional money, prepay for some expenses, and pay 9% on a line of credit to the bank, as opposed just to save maybe 10% income tax?
Right.
Does that make sense?
Mm-hmm.
and encouraging people to, this might be a time to use whatever low rates are available to you to improve your, maybe reduce your inventory position that you're carrying forward and create some cash flow so that you can minimize your debt load. And contrary, save some interest expense. I had a guy that decided to do some equipment expensing, so he's not even paying tax on it. It's equipment he's going to keep around for a while. He's gonna bring in about $2 million of extra cash. That $2 million is going to give him plenty to operate off of. So he's basically not going to have to tap his line of credit. He was projecting of having to spend about $150,000 on his line of credit and interest expense next year. So that action actually isn't going to cost him virtually. I think his tax bill is going to be maybe $30,000, but he's going to save $150,000 in interest expense.
Yeah. Something big that we've been talking about on Twitter a lot, is just the marketing of grain and grain sitting in your bin. The cost of carry is real now, because if you do have, a line of credit that's sitting there at 7-8%, and you're carrying that, and you've got grain in the bin, man, that's money that you could be saving on your line of credit.
Yeah.
And then, Dave, I would also say, I think that's the old school term of farmers, or what people thought of as like just inherently always battening down the hatches, pinching pennies, kind of like that. And some can't get out of their own way, even when times are good, they're still like that.
Yep.
But they're probably the ones that are still driving the 30-year-old truck but got $5 million in the bank, and still feel like they're in trouble.
And that's what inflation's supposed to do, is slow spending. And that's why the government raises interest rates, so that we can slow spending. It made me hesitate. Or do we buy a new vehicle? Or no, we wait, drive that old, beater truck until it's 400,000 miles. And
it's certainly done that in the housing market. We were planning to move in the next year or two, and I can tell you, because we moved to town.
Correct.
And then we wanted to get back out to the farm, and it's like, I ain't going anywhere. I got an interest rate of 2.25%.
Correct.
Screw that. I'm not paying interest.
I've seen that with a couple acreages. Nobody's going to exactly borrow another $200 to get a fancier house, but then, now we got it all at 8% instead of 2%.
I should have bought a house that was worth 2 times what I could afford, 3 years ago.
You guys had mentioned too about, what do the top tier clients do? But, another thing is they're not just looking at calendar year financial statements either. They're looking at crop year financial statements. Okay. So they're looking at their 2023 corn crop and saying, how much money did I make on my 2023 corn crop? And keeping in mind that they purchased the seed in 22, maybe purchased some of the fertilizer in 22. They had all their other production costs in 23, and they probably didn't sell any of their crop until 24. So if you pull a calendar year financial statement, you have no idea whether you made any money on that.
Right.
But being able to segregate those revenues and expenses and pull them together from those 3 years, there are programs out there. There's software available that does that now, just directly out of your accounting software. And not all does, but some of it does. And being able to look at that and see what you truly made off of that particular crop, and even drilling down to the fields if you want to do that.
I got a question for you there, Bill. So I met with my accountant the other day because we hired a couple new employees, and I'm going to relate this to farming here. Is we started strategizing SEP, a self-employment retirement, or a self-directed IRA. And it came down to tax issues, so we ended up meeting with our financial planner and the tax accountant so that we could do the best for our employees. What are farmers doing for retirement other than, hey, let's sell the farm equipment and sell the land? Are they doing like SEP accounts or 401ks, or what do people do for retirement?
We do see a few SEPs. I would say the common thing with farmers is farmers are usually cash poor and equity rich.
Yep.
Okay. And so a lot of farmers find it distasteful to put money into a separate fund when they can use that cash on their farm. So, a lot of farmers they look at the farm as being their retirement, okay? The equity that they build in their farm. But that being said, the larger farmers, they do diversify, okay? If you have other employees out there, I don't see a lot of SEPs because you got to do the same thing for everybody.
Correct.
Okay.
Yep.
More 401ks out there for that type of thing. And it used to be 401ks were just for the big companies because there was some pretty heavy costs on that. Those costs have really been managed and down to a lower level. So we see a lot of farmers with maybe just 2 or 3 employees even. They either migrate to a simple plan, or if they want to increase their contributions, we'll convert that over to a 401k. Now, if you are an older farmer and haven't done this, and now you've got this cash flow and you want to start doing this, you can actually create what's called a defined benefit plan, and it's age-based. The older people get more contributed for them than the younger people do, because it's based on having a certain income when you retire. So in instances like that, that you can go well above even the SEP limits on your contributions, but that's something you have to have the right circumstances to make that work.
So, Bill, last question I got is kind of what we were talking about there is, what farmers view as retirement. If we've got a listener listening right now that's 2 to 3 years away from pulling that trigger, what advice do you have to them? Is it, let's sell and liquidate now because the tax environment will never be this good again? What are you thinking?
Well, yeah, I mean, that's funny that you say that. I mean, it's the tax rates today, I've been doing this for over 35 years, but the tax rates we have today are the lowest we've had, in probably since before the Vietnam War. Okay. So, the first year I did tax work, was the highest incremental tax rate was 70%.
Whoa.
Okay. The highest incremental rate today is 39. Okay. So, where is it going to go? It's likely we're not going to go lower than we are today. Okay. It's more likely we're going to go higher. Now, that being said, you can gain a lot of ground by planning ahead. Okay. If a farmer walks into my office and says that I'm going to retire at the end of this year, and I've got 1 year to plan it, we got a really limited runway. That's like trying to take off a jumbo jet out of your local airport. Okay. If we've got a longer runway to work with, we can do a lot better job and inflict a lot less pain in that process. So, especially if you're looking at migrating to another generation, if you're looking at, a liquidation or a migration to where you're going to get rid of all your active equipment, you're going to move to, cash rent or crop share of your land. If we've got that longer runway to work with, we can do a lot better job for these people and really control the costs of that.
Nice. That was a good answer.
Yeah.
Well, I'm going to wrap up a quick summary of our show today, and then once I do that, Bill, we'll have you share some contact information with our listeners. Corey, you want a challenge?
I don't care.
All right, you get to do the challenge. We talked with our CPA, Bill Glazner from Adams & Brown, one of the ag industry leaders there. It's important to have these tax planning meetings to maybe get there earlier than you think you need to, because there can be a lot of strategy that puts the plan together. Some of his top-tier clients do it more than just once a year. They try to have monthly meetings. They also work well with other people in their advisory committees. It's good news. We still have our Section 179 deduction, but we are potentially phasing out, and not potentially, it's written the way it is now. We're going to phase out bonus depreciation, 20% annually, until that completely goes away. Everything seems to have been adjusted for inflation, so those are ratcheting up the limits and items there. looking at a third disaster payment coming out, and learning that also brings with it a commitment to purchasing crop insurance for the next couple of years. We can still utilize gifting and potentially ask your CPA about paying dependent children to work on your farm as a potential for additional deductions on that side of things. We have some of the top tier clients that Bill's worked with, making sure they analyze crop year financials rather than just looking at things year over year. And of course, if you're going to plan for retirement, you can't start today to retire tomorrow. So put as much thought into that you can. So Bill, what's the best way for people to look you up if they got questions themselves?
So welcome to reach me. I'm in McPherson, Kansas most of the time, but I travel all over to meet with clients and to cover other locations. But my phone number is 620-241-2090. I'm located 103 North Main in McPherson, Kansas. And, give me a call, reach out. My email is bglazner, Glazner, at adamsbrown.cpa.com.
Awesome. Well, thanks for hanging out with us, Bill. We appreciate it. Corey, what's your challenge?
My challenge is, that guy on TikTok that's always like spitting out water and telling you to go to the gym? I'm going to do that. Like, get to the office.
Just let me close my laptop.
Go to the office.
Don't spit all over the studio.
Go to the office,
like
I'm saying that because I have not, and I know that I need to. I need to tell myself I need to carve out half a day a week at least.
Yeah.
To get to the office.
Well, we appreciate you again, Bill. We also appreciate you listeners. So until next time, have a good one.